Hey there, good afternoon traders. This is Trader Tim from over at eminimine.com. Just doing a quick market analysis video here. Today's Monday the 25th of January. And not a lot has really changed at all over the last couple of weeks. I have a little channel drawn on my daily chart here. You can just see us on the S&P riding the top of that channel. Today we had a little bit of an intraday dip, and if I take a closer look at the ES chart, you can see on the daily we had pulled back here on the 15th to just about the 50% retracement and have been working our way up. We made it close to the negative 23% target, about 10 points away. And then today, intraday, we came down to essentially the next daily halfway back long, and it was a 37.97. So no real reason to get overly bearish. And when you're trading intraday, it's important to remember that daily trend. And more importantly, remember where the daily failure point would be. So currently the swing low, the most recent swing low, is on the 15th of January here on the ES. And so that's the low that would need to be taken out that would cause me to start thinking about potential larger trend change. Otherwise, the uptrend is still intact. Today, longs in the morning were just fine, and until we see some sort of change in market's reaction to any kind of news. So what we've had lately is bullish news comes out, market goes up. Bearish news or not so great news comes out, market goes up. Once the market starts shifting a little bit, and if we get some bearish news and we see the market go down, or we get some seemingly bullish news and the market goes down, okay, now I'll be looking for maybe taking some shorts again. But over the last 2 weeks, I have had no shorts, and I've come into each day saying, yeah, I'm just going to pass on any short setups that occur because they're just not getting a lot of follow through. Today, if we go to, I'll go to the 5-minute chart from the morning, and I just wanted to highlight one of the little longs. If we look at taking, I have the trading hours turned off so that we can see a little bit clearer where the gap is, how big it is, and then this is yesterday or Friday's low at the close. And so being able to grab some of those swing lows and carry those over into the next morning, I find really useful. So this morning we did find some support at that, Friday afternoon low at the close to this morning's high, and this is 20 minutes after the open. But it does give us a indication that yep, there's some support. We ended up getting a low tick of the day at the low price. We ended up setting in a long at 38.41 and a quarter. And then there was a nice little follow-up long on the 512 right at the top of the hour. If you waited for that one to complete its negative 23% target, there was another long on the 512 as well, even smaller ones. Here's a little double bottom off of this halfway back long that's set up there. So there have been a lot of opportunities for long setups in the morning, and it's almost been easier in a sense to trade these first few weeks just because I'm not entertaining these kind of shorts at highs just because they're not getting follow through. I mean, you could draw it up here and you get maybe a first target hit, but that's really about it. We're pretty much going into new highs as soon as they break, and today we had that bit of a dip intraday that took us down to this was that daily 37.97. But so long as you didn't freak out and think, oh no, I got to get short, and then you're shorting down here as we're coming into the daily long, just use it as an opportunity to add to longer term position. When you get those kind of dips down to a daily level, it's just an opportunity to build up a bigger position in a longer term investment or put on some sort of swing position. This week we actually do have a Fed meeting announcement on Wednesday, and so you wouldn't expect much change to come from the sentiment of the Fed, but we'll be watching that on Wednesday, and then Thursday, you know, it wouldn't be a shocker if we had a bigger sell-off day, kind of like this on the first of the year. Just because the day after the Fed meeting, sometimes there's some dumping of positions. So I'll be watching that. If we just come down to the bottom of the range, no big deal. But the low of the 15th is going to be somewhat of a pivotal point. If we break that, if we come down below the trend line, well then, okay, we can entertain drawing up a short on the daily chart. But any pullbacks at this point are pretty much just buyable. We've got stimulus talks, so that could be another catalyst for pushing the market when there's some resolve there. And then just watch out for those earnings this week. If you are playing individual stocks, Tesla, being one of them, coming out here on the 27th. I know, and then Netflix last week had a pretty big pop on the earnings, but if you're going to play options into earnings, just know that you're going to pay a lot more, even if it hasn't moved yet. The implied volatility is typically through the roof, especially these bigger names, your FANG stocks, your Tesla. So you just don't get overly greedy about expecting an option position to 10x or 100x your position. If you go into a trade only looking at the profit potential, that's really a bad spot to be in. And for any of you who've read like the Market Wizards books, Jack Schwager talks about this, where you really want to be analyzing whether or not to place a trade based on looking at the full reward to risk. So what am I actually risking? And if there's a substantial profit potential, then relate that to the size of the risk. So it may be that there's a better entry later on at a lower price, or when implied volatility comes down, or just in a different stock or at a different time on the ES when not so many eyeballs are chasing a market. So, looking at how you can minimize your risk, whether it's long-term investing, swing trading, or day trading, always come back to risk, risk, risk. If you find yourself just looking at for the profit potential, or counting the dollar bills before you've even placed the trade, you're in for potentially a pretty bumpy ride. As far as Bitcoin goes, I did dump some at the start of the year, looking for that pullback, and we did, get I consider it a small pullback. You kind of have a descending triangle forming, and there's a pretty good percentage chance that will resolve to the upside. I was looking for a 26,000 as my kind of pullback point to really go in much harder. And so it's a bit of a descending triangle, a bit of a channel, both of which are very bullish. And so I did add some down here at the 30,000 area, but I'm still kind of hoping for a little bit of a dip, so get in at a little bit better price. But nonetheless, as you can tell, I'm bullish still on the current crypto market, and that being a long-term play, I'm not swing trading, I'm not day trading it. I sold some here at 20,000, 30,000, 40,000, and then just looking to add some back in. That's really all I'm doing in the Bitcoin space. So we will be doing a live trading session tomorrow morning, as we always do on Tuesdays, and you can check that out at eminimind.com/VIP. I hope everyone has a great week. Watch out for that Fed meeting announcement Wednesday afternoon, and keep an eye on those earnings if you are trading individual stocks. So thanks everyone for tuning in. I hope you have a great week. We'll talk soon.